We'll start, though, with what President Obama's second term means for monetary policy. Bob McTeer is former president of the Dallas Fed, a distinguished fellow at the National Center for Policy Analysis. He's also a CNBC contributor. And Robert Heller is former Federal Reserve governor and a CNBC contributor as well. Gentlemen, good morning. Good to have you both.
Good morning. Good to be here.
Robert Heller, what happens now? I assume we're talking all the way through 2014, but he's going to have some big decisions to make when it comes time to reverse this policy, if in fact you believe that's going to happen sometime soon.
Exactly. I think we will stay, the Federal Reserve, will stay on the course that they're on right now. It's a solidly Obama Federal Reserve board, and they will do everything possible to support his policies. They will continue to buy a humongous amount of federal debt and thereby finance the deficit.
Bob, what about you? I guess I'm wondering, it's hard to talk about a reversal of Fed policy when you have a day like today and discussions like the ones we're having regarding the fiscal cliff. Does QE infinity, is it somehow accelerated in the months to come, given the risks in the near term?
Don't say QE infinitive, say QE indefinitely. I think there's hope that it will come to an end at some point. I might just make the point that I doubt that Mr. Bernanke is going to be around after the 1st of January 2014. I can't imagine that he'd want a new term. Although I agree with Robert that that probably wouldn't change the course of monetary policy. I think at the very least, we've got another year and a month of what we now have.
Yeah. Does the current environment, Robert Heller, change your view as to how the Fed needs to act? I mean, we're already getting on Twitter, for instance, people asking where that out of the ether Fed call or that headline hinting at possible stimulus on a day like today. Is that going to happen in the next few months?
Well, the Fed can't do more stimulus. They already have the foot right on the gas pedal, full out. And with the fiscal cliff hanging over us, they will continue that course. They will try to be a center of stability. But the problem is that in the long term, they are seeding the seeds of a strong inflationary push in the country, and then they have the problem of reining that back. How are they going to pull back trillions of dollars in excess reserves from the banking system without causing a recession? They will cause another big recession.
There's no doubt in your mind about that?
Yes.
Bob, how about you?
There's doubt in my mind. There's doubt in my mind about that. QE2 has been adding to bank reserves, but it hasn't been very stimulative because banks haven't been converting that into money. And since they announced QE3, I don't think the Fed's balance sheet has actually grown any, and the money supply is not growing much faster than it was. So I don't think the question of unwinding our exit strategy is going to come up for quite a while.
Yeah, but when it does, Bob, I mean, are we due for a recession no matter what? Is ripping this Band-Aid off going to result in bleeding? I mean, some argue that it doesn't have to be that way.
I don't think it has to be that way with regard to monetary policy. I think that they can possibly manage the reduction of the balance sheet without a problem. The recession, if we get one, I think is going to come from the fiscal cliff and dangers in that area.
Gentlemen, thank you so much for your time. Robert Heller, Bob McTeer, important discussion, and in light of what's happening right now, even more so. Thanks so much.